Morning again, Phil Ellaby, Northern Accountants. This is the third video of the morning, and it is regarding the business interruption loan scheme that has come out. There's been a little bit more detail released, so I thought I'd give you a quick summary. And what I will do is I will attach the blurb that I'm reading now to the bottom of the email, so you can read the detail. So basically, what it said is it's coming into effect as of Monday, the 23rd of March. The aim of it is going to be delivered by the British Business Bank to support MSMEs to be able to access bank lending and overdraft facilities during this difficult time. Just while I mention overdrafts, just be very careful about overdrafts. The banks are still pushing on with their increased overdrafts. So people like Santander, Lloyds and NatWest, I believe, are putting APR at 29.9 to 39.9% APR. So just be really careful when banks are throwing overdrafts at you instead of loans, because it'll be in a very, very expensive way of financing debt. So it's just something to be aware of. In terms of the features of the scheme, the government will provide accredited lenders with a guarantee of 80% of the loan, subject to the overall cap of the lender. The government will support loans up to £5 million in value, and the loans will be interest-free for the first 12 months. And effectively, interest will be charged, but I believe the government will be covering that. So your loan paperwork will say there's interest on the loan, but that will be covered by the government. It says some accredited lenders have agreed not to charge arrangement fees. So some of the accredited lenders, of which there's a link to a list which will be in the email, will be in there. Fishing, agriculture, and aquaculture businesses may not qualify for full interest or payment relief. So that's just something to be aware of. There is a no guarantee fee for the SMEs to access the scheme. So what I'm assuming there is that you will pay the bank to cover 80% of the guarantee, 80% of the loan. But again, it's a little bit thin on the ground in terms of the detail there. The scheme may be used for unsecured loan facilities of £250,000 or under, and that is at the lender's discretion. Now, I think the key there, that is at the lender's discretion. So again, I've mentioned it before, this isn't a war chest where we can all just waltz into NatWest and ask for $250,000. It will come down to affordability and your ability to repay that debt in the future when the businesses return to normal sort of status. Again, it'll be about affordability and things like that. Facilities above 250k, it requires the lender to establish a lack or absence of collateral prior to the business using the scheme, and primary residential property cannot be taken as security under the scheme. So basically, you can't put your house against the 20%. The finance terms are up to 6 years, and there's also asset finance facilities. Overdrafts and invoice facility terms will be up to 3 years. What else have we got? And it says the scheme is initially intended to run for 6 months. There's a list of accredited lenders, which will be in the email. You can get that. So who is eligible? What does it say here? Anybody with annual turnover of no more than 45 million. It's open to sole traders, corporate bodies, limited partnership, LLPs, and any other legal entities carrying out business activity. And the business must generate 50% or more of its turnover from trading activity. So investment companies will not be able to get this sort of thing. And the business must operate through a bank account, so you must be doing that. How do we access the scheme? Do not approach the British Business Bank. Preferably approach your client's bank, your own bank, or through one of the accredited lenders, which again, the list is supplied. There'll be great demand applying via the lender's website, and phone lines will be busy, and there's limited capacity in branches to handle this. Having a borrowing proposal which is not affected by the COVID-19 pandemic would be considered viable to the lender, for which lenders believes that there's provision of finance. So basically what it's also saying is that if you aren't affected, you can still go for lending. It's not restricted to anybody who is affected by the COVID virus. I think that about summarises up. As I say, bear debt in mind, because it is repayable. It's not an empty war chest, and basically you've got to consider the decision as to whether you're prepared to put yourself in significant debt to keep the business trading at the moment. I'm not saying what's right or what's wrong, but these are the sorts of conversations you can have with your client managers when we're doing the cash flow forecasts on the Float software that we're installing for many of our clients. So that's about it. I hope you have a great day. Take care now. Thank you.